While being slightly fast-paced, the current market is closed. The last reported price for Lumen Technologies, Inc., LUNN, was $6.91 per share as of the NYSE close on October 7, 2025, reflecting a daily change of minus $0.25 or minus 3.49%. Now, the conventional wisdom surrounding Lumen is that it's a legacy telecom struggling under a mountain of debt, a slow-moving giant in a market increasingly dominated by pure-play fiber and hyperscalers. But this narrative misses a crucial, unexpected reality that is driving the stock's recent dramatic momentum. Lumen is positioning itself to be a critical, undervalued utility for the AI revolution, an angle few investors truly appreciate as they manage their portfolios on platforms like Fidelity or Robinhood. The true tension here lies between the market's perception of Lumen as a dying dinosaur and the company's internal transformation into an AI infrastructure enablement play. The recent stock volatility, particularly the significant momentum moves we've seen over the last 3 months, isn't just retail frenzy. It's a tangible reflection of this foundational shift beginning to resonate with institutional money. The 3-month return of over 42% and a 6-month return of over 87% is staggering for a company of this profile, pushing it from its 52-week low of $3.01 earlier in 2025. This spectacular climb suggests a profound narrative shift is already underway, a shift that is far more powerful than the quarterly revenue declines that keep the bears entrenched. The immediate-term price movement, despite the minor pullback on October 7th, is part of a larger, highly aggressive uptrend that began in earnest around August 2025. Daily swings have been volatile and average volume is elevated, indicating heavy institutional and retail transactional activity. The day's trading range itself, from a low of $6.28 to a high of $6.60 on October 3rd, showcases the intense directional battles between bulls and bears. What's fundamentally powering this surge, beyond the general market rotation into communication services sector, is Lumen's ability to secure large-scale contracts for its high-capacity fiber and conduit assets, contracts that are directly tied to the escalating demands of generative AI and hyperscale providers. Specifically, the news around accelerating its multi-billion-dollar network expansion to meet soaring AI demand in September 2025, coupled with announcements of further enhancements to its capital structure, served as a potent catalyst. The street is slowly realizing that Lumen's vast intercontinental fiber network, an investment relic from the past, is now a core competitive advantage for the future of data-intensive AI workloads. This is why when you look at an intelligent portfolios algorithm trying to categorize LUN, it struggles. Is it a slow, declining dividend-free telecom or a rapidly repositioning fiber infrastructure play? This ambiguity is precisely where the opportunity lies for those who self-invest and do their deep due diligence rather than just relying on superficial screens from investing sites. Further examination of the intraday behavior reveals something critical for active traders using platforms like Interactive Brokers Trading Platform or Robinhood Stock Trading app. The recent surge has pushed the stock significantly above all its major moving averages. It's up over 12% in the last 5 days and a remarkable 54% over the last 50 days. This creates a powerful technical picture, suggesting strong momentum is overriding any residual negativity from its declining legacy business. The technical indicators flash intense bullishness, moving from a deeply oversold position earlier in the year to a momentum grade of A+ on its 3-month performance, suggesting a high short-term price strength. However, this parabolic move also comes with extreme volatility, as indicated by a high ATR, meaning investors need to exercise caution. The shorts are not entirely gone either. With a short interest ratio of 4.38 days to cover, any further positive news, especially another large AI-related contract win, like those driving the momentum in NVIDIA stock or even Tesla stock's infrastructure narrative, could trigger a significant short squeeze. The institutional activity is the clearest sign that the smart money is recognizing the new reality. While institutional ownership stands at around 71%, with large holders like BlackRock Inc. and Vanguard Group Inc. holding substantial positions, the net insider activity has been notably positive. Over the last 12 months, insiders bought nearly 6.3 million more shares than they sold, including a key open market buy by an officer in August 2025, a strong signal of conviction that goes far beyond the typical compensation-related stock transactions. This insider buying aligns with the strategic shift towards Network as a Service, NAS, and Private Capacity Fiber, PCF. The NAS milestone in particular, which saw the company surpass 1,000 clients, reinforces the narrative that Lumen is executing on its digital platform vision. For retail investors utilizing an individual brokerage account or looking for investment help through Schwab Intelligent Portfolios, understanding this convergence of insider confidence and fundamental structuring is paramount. Now, let's briefly address the elephant in the room that keeps the stock out of the major indices and on the radar of bearish analysts: the fundamental business decline and the substantial debt load. Lumen's core business model is a blend of legacy telecom services, including voice, data networks, and traditional enterprise connectivity, and a rapidly growing next-generation segment focused on fiber, edge cloud, and digital platforms. The legacy segments are in secular decline, leading to continued revenue contraction, which was evident in the Q2 2025 results, where total revenue fell year over year. The company reported a significant non-cash goodwill impairment charge of $628 million in Q2 2025, a brutal accounting reality that underscores the shrinking value of its legacy assets. Yet, the adjusted EPS loss of -$0.03 in Q2 2025 was a massive beat compared to the forecasted loss of -0.25, a surprising 88%. This beat wasn't from a sudden revenue spike. It was a demonstration of aggressive and effective cost management and operational efficiency, raising the run rate cost out target from $250 million to $350 million. This relentless focus on shoring up the financial position is the hidden reality that is supporting the stock price, even as the top line struggles. This financial discipline is a major factor in improving the perceived risk profile for those engaged in online investing. The other major headwind, the massive debt, is being proactively managed through liability management exercises. The company successfully executed a bond offering to extend maturities and reduce the coupon rate in Q 2025, saving an estimated $50 million annually in interest expense. This strengthening of the balance sheet is crucial. While a company like Apple stock doesn't worry about solvency, for Lumen it's the single most important factor. The market has been expecting a slow, painful debt restructuring, but the reality is that the company is utilizing its newly valuable fiber assets, specifically the PCF contracts that have generated hundreds of millions in sales, as an asset base to clean up its capital structure. This is the financial jujitsu that is catching analysts flat-footed, leading to a scramble of target price revisions and rating changes as seen on investing sites. The previous deep-seated belief was that the debt would crush the company. The new reality is that the debt might be managed just long enough for the AI demand for their infrastructure to provide the cash flow required for a true transformation. Looking forward, the future outlook for Lumen is entirely dependent on its ability to transition from a revenue-declining telecom to an AI-focused infrastructure provider.